The year 2024 has been a landmark year for Bitcoin. The world's leading cryptocurrency shattered previous records, reaching a price of $89,000. This surge has captivated investors, analysts, and the general public alike. What's driving this incredible growth? A confluence of factors has aligned to create a perfect storm for Bitcoin's ascent. This essay will delve into the key drivers behind Bitcoin's record-breaking rally, examining the impact of political developments, economic policies, and institutional interest. We'll explore the potential for Bitcoin to reach the coveted $100,000 mark and analyze the future outlook for this digital asset class. The cryptocurrency market has always been volatile, characterized by booms and busts. However, 2024 feels different. The drivers behind this rally appear more fundamental, hinting at a potential paradigm shift in the financial landscape. We are witnessing the growing acceptance of Bitcoin as a legitimate asset class, no longer confined to the fringes of the financial system. This shift in perception is attracting a broader range of investors, from retail traders to institutional giants. As more players enter the market, demand for Bitcoin is surging, driving its price to unprecedented heights. The question now becomes, how high can Bitcoin go, and what does the future hold for this revolutionary technology? Donald Trump's unexpected return to the White House in 2024 sent shockwaves through the global political landscape. His victory also reverberated through the cryptocurrency market, particularly for Bitcoin. Trump, known for his unconventional economic policies, had previously expressed support for Bitcoin and cryptocurrencies. His re-election ignited a wave of optimism within the crypto community, propelling Bitcoin's price upward. Trump's pro-crypto stance translated into concrete actions that further fueled Bitcoin's rally. He announced plans to explore the possibility of making Bitcoin a reserve currency for the United States, a move that would have been unthinkable just a few years ago. This bold proposal signaled a potential shift in the global financial order, with Bitcoin challenging the dominance of the US dollar. While the idea of Bitcoin as a reserve currency remains controversial, Trump's endorsement provided a significant legitimacy boost to the cryptocurrency. It legitimized Bitcoin in the eyes of many who had previously dismissed it as a fad or a speculative bubble. This newfound credibility attracted a wave of new investors, further driving up demand and price. Beyond the symbolic victory, Trump's administration also took concrete steps to create a more favorable regulatory environment for cryptocurrencies. This included streamlining regulations, providing clearer guidelines for businesses operating in the crypto space, and fostering innovation in blockchain technology. These moves fostered a sense of confidence among investors and entrepreneurs, paving the way for further growth in the crypto sector. While Trump's pro-crypto stance provided a tailwind for Bitcoin, the Federal Reserve's monetary policies played an equally crucial role in shaping the cryptocurrency's trajectory. In November 2024, the Federal Reserve announced a surprise rate cut, sending shockwaves through traditional financial markets. This move, aimed at stimulating the economy, had a ripple effect on alternative assets like Bitcoin. Lower interest rates reduced the return on traditional investments like bonds, making riskier assets like stocks and cryptocurrencies more attractive. Investors seeking higher yields in a low-interest rate environment poured capital into Bitcoin, further fueling its price surge. The Federal Reserve's actions inadvertently created a favorable environment for Bitcoin to flourish. Moreover, the Federal Reserve's rate cut coincided with growing concerns about inflation. With trillions of dollars pumped into the economy through various stimulus packages, investors sought hedges against the eroding purchasing power of fiat currencies. Bitcoin, often perceived as digital gold due to its limited supply and decentralized nature, emerged as a popular inflation hedge. This confluence of factors, low interest rates, fears of inflation, and a search for alternative investments, created a perfect storm that propelled Bitcoin to new heights. The cryptocurrency market, once considered a niche sector, was now attracting mainstream attention, driven in part by the actions of the very institution it sought to disrupt. Section 4, Institutional Investment and the Rise of Bitcoin ETFs. The year 2024 marked a turning point for Bitcoin's institutional adoption. For years, institutional investors had largely remained on the sidelines, wary of Bitcoin's volatility and regulatory uncertainty. However, the tide began to turn as major players like BlackRock and Fidelity Investments warmed up to the cryptocurrency. This institutional interest proved to be a game-changer for Bitcoin, injecting a level of legitimacy and capital that had previously been absent. One of the most significant developments in 2024 was the approval of several Bitcoin exchange-traded funds, including BlackRock's highly anticipated spot Bitcoin ETF. ETFs allow investors to gain exposure to Bitcoin without directly owning the underlying asset. This made it easier for institutional investors, bound by regulatory constraints and risk management protocols, to add Bitcoin to their portfolios. The launch of Bitcoin ETFs unleashed a wave of institutional capital into the cryptocurrency market. BlackRock's ETF, in particular, saw record trading volumes, signaling strong demand from institutional investors. This influx of institutional money propelled Bitcoin's price upward, pushing it closer to the coveted $100,000 mark. The entrance of institutional investors had a profound impact on the cryptocurrency market, extending beyond just price appreciation. It brought a sense of maturity and stability to the once volatile sector. Institutional investors, known for their long-term investment horizons and sophisticated risk management strategies, helped dampen Bitcoin's notorious price swings, making it a more attractive asset class for a broader range of investors. Section 5. Can Bitcoin reach $100,000? Analyzing market views. Section 6. Global demand, whale activity, and the future of Bitcoin. Section 7. Bitcoin's future in a changing financial landscape.